I get the question of what investors often miss when they're looking at industrial versus any other investments. And I get this question a lot, generally around the yield. Real estate generally will return, in the low sort of teens in terms, if you're doing anything between 9 to 13% on a consistent basis, you're doing really well. But time and time again, I get the comment that, well, I'm looking for a higher yield. While we're all looking for higher yields, especially myself included, I'm also looking for sustainability. While higher yields are always possible, and they're also possible within industrial real estate, I'm also looking for something that is consistent. We're not looking for 30% this year and then potentially minus 10% the following year. We're looking for something that's somewhat consistent. And so if we can manage those returns by by number one, ensuring that our costs are being covered by the tenant, or the operating costs are looked after by the tenant, minimizing our vacancies and, creating long-term contracts with our leases, then that gives me some sustainability in terms of the returns. So going back to the misconception of, industrial real estate versus others, what we can, to some degree of confidence say is that there's some sustainability in industrial REITs that are not provided in other asset classes. Well, again, while yields are important and that's what drives our business, to ensure that we're always providing value to our unit holders in a very respectable yield, we're also looking for sustainability. And if you're investing in private real estate, that should be your number one consideration, is ensuring that there's a sustainable return over the long term.